You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show.
Yeah, it's great to talk with you.
Mike, how would you describe what's happening on the stock markets right now?
Well, this has been a dramatic month. There's no doubt about it. And all sorts of headlines and people talking about tariffs and Trump and so forth. But I just want to boil it down to some simple stuff. And then talk about something that happened that was very alarming. But the S&P 500, well, first of all, it's important for people to realize since New Year's, gold is up almost 20%, even with a little pullback that's been taking place off 3,500. Gold is up over 20%. Stock markets around the world are outperforming the S&P 500, the U.S. stock market. The dollar is down, but being in the United States, all the obsession is about what's the U.S. stock market doing. Well, as I said, it's lagging just about everything else in the entire world. What the U.S. stock market has done is it made a peak in February, and then the S&P 500 fell over 16%. It made a low in April during the time of the Trump tariff news, and we'll talk about that in a little bit, and has since put on a rebound. But despite that rebound, it remains below its 200-day moving average. The same is the case with the NASDAQ. The 200-day moving average on the S&P 500 is right now a little over 200 points away. It's at 58.20. Well, this is significant because in bull markets, that moving average acts as a long-term support level. So when the market falls to it, you'll get buying, and very rarely will a market go below it, and much less stay below it when it's in a bull market. And now it's below it and simply going back up towards it. So now it's going to be significant resistance. In a bear market, that moving average trends down and acts as resistance. So I think what we're facing is U.S. stock market below those moving averages. It's likely to get to them by the end of this month. But if it then stalls out and turns back down, I think we're going to be facing, for the U.S. stock market, some significant declines going forward for it, essentially a bear market. So the next 90 days is going to be some of the most important we've seen in the past couple of years for the U.S. stock market. Now, the dollar is in a bear market. It's way below those moving averages and barely even bouncing at all. In fact, the dollar is on a basically 2-year low, trading right around 100, the U.S. dollar index. So that looks like it's in a bear market for sure, which is positive for gold. Gold historically trades opposite to the U.S. dollar index, and gold is doing exactly that. So in my view, gold remains one of the best investment positions people can have. Now, when it comes to the United States, the next key market is the bond market, and bonds have not acted as they have in the past. Last year, when the Federal Reserve lowered interest rates in September, bond yields actually went up instead of down on the 10-year bond, and the value of bond funds went down too. Before 2020, whenever there's a bear market in the stock market, bonds went up. In 2022, there's a bear market in the stock market, but that time bonds went down. They're not acting as a safe haven. They're not, this makes a tough situation for Americans who are do the typical 60-40, U.S. stocks and 40% bonds portfolio allocation. They lost money in 2022. I think they're at high risk of going through a similar situation, which will probably be even worse in the future. So everything hinges on this rally. Can the market do more than just go up to the moving averages? Can it go to a new high? To even do that, it would take probably lots of base building from here. But this is a very dicey situation, and I think a lot of the geopolitical and bigger economic news has a lot to do with it.
Any concern about the first contraction in the U.S. economy in the last 3 years, down 0.3% in the first quarter?
Well, I'm not that concerned about the very short term when it comes to U.S. economy. It's kind of a funny situation in the United States. I just read the earnings report in the conference call transcript for the casino company Caesars, and they said in there that they're not seeing any softness in travel to Las Vegas and the revenue people are spending, and they said that if they start to see that, they would lower their hotel prices, but they can look out 90 days and see no reason to do that. So I think in one sense, the American consumer is doing okay, and they're still putting money into the stock market. When the market tumbled in April, one day the Dow was down like 1,500 points on a Friday, and that was actually the biggest day ever in U.S. stock market history for individual investors putting money into the market, the biggest amount of money ever. So people still have money that they're buying stocks with obsessively. Everything I said about a potential bear market and this and that, they don't believe it, or they don't listen to any such warnings. And as long as they have somehow access to this money, they're going to keep doing what they're doing. The problem is, though, that the middle class or lower class person is still struggling in this economy. They're not the ones going and taking these trips. They're not the ones going out and buying stocks. They got to use their credit card to stay afloat, and they've been hit by inflation over the past, couple years, and not been able to improve their situation. So in the United States, most of the consumer spending is being driven by the wealthier people who also own the stocks. So as long as the stock market, in their view, is okay, I think the U.S. economy is going to be okay. But if what I said earlier could happen, and that's by the summer the market's rolling over and trending down, if it goes through those April lows in the fall, you will see a sudden contraction in the U.S. economy because all these people, will tighten up on their spending and they will be getting scared. But right now they're not scared. They believe in this rally, and many of them, frankly, believe 100% that the tariffs and Donald Trump are going to create a economic boom that's going to start within months. They believe that. I have many friends that believe this kind of thing and really are like fans of Trump. I would say half his voters are in that situation. And so they're excited, frankly. But lower stock market prices would hurt everything. And I think that's a huge risk to come.
What do you think's going on with gold?
Well, we've seen a complete, again, I talk about the United States because that's where I live, but American investors, individual investors are ignoring gold, and even though it went to 3,500, and even though it's up 20% year to date, even though it's outperforming the U.S. stock market, even though it's been outperforming Bitcoin, they completely ignore it because they believe in the promises Bitcoin gurus tell them and predictions, of a coming economic golden age in the United States and so forth. But what we have seen is gold do very well over the past couple of years, really starting from the date that Russia invaded Ukraine, and the United States and Europe sanctioned Russia and hit their banking system, we saw the central banks around the world begin to accumulate gold at a faster pace. The Chinese central bank, one of the leaders of that, they've been doing that the past couple of years. That's helped fuel the rally in gold over the past couple of years. Now that rally is accelerated because the geopolitical tensions with the United States vis-a-vis the rest of the world has gotten more volatile. And gold is a safe haven. At the same time, the U.S. debt situation is not improving. When Trump got in office, Elon Musk created a Doge, and they were saying they could cut spending by over $1 trillion. $1.5 trillion was the Elon Musk target. And if you can remember, one of the first press conferences where Elon was in the White House and he took his boy in there, and Trump was sitting at the table, the desk, the Resolute desk. Well, Elon said the country's on the path to bankruptcy because of government spending, and we need Doge to fix this. Well, Doge has failed. Instead of $1.5 trillion cut, Doge has only managed to reduce spending by $150 billion, and at the same time, other spending programs have increased. So there's been no reduction in government spending at all. In fact, government spending is up a little bit this year. So that's, if my message is, if anyone is a Trump fan and likes Elon, if you believe in the words of Elon said we're on the path to bankruptcy. Well, Doge has failed for whatever reason. You may not want to blame it on him, blame it on something else, but it has failed in its goal. And before Trump got in office, when Biden was president, I think I've said on your show, the U.S. is on path to reaching a debt to GDP ratio of over 130% in the next few years. And that hasn't changed because Doge has failed. So that's where we're at. And what that means is that's impacting the bond market. And another reason why gold is going up, because if bonds in the United States, Treasury bonds, can't act as a safe haven, then one of the simplest alternatives is gold. So I think that's really a trend that's intensified. People are starting to see gold as a safe haven, not bonds. And when the market fell in April, and Trump had a tariff acceleration on China, it was like midnight on a Tuesday, I think it was. Well, that night, I was looking at the markets very closely, and it was one of the most dramatic things I've ever seen. I got up like 5 a.m., and every market in the world was down substantially. The value of U.S. bonds was down substantially, and then the market opened in the United States, and it continued to sink. And the bonds were sinking. Treasury bonds were sinking in value. I'd never seen that happen in my life, where the U.S. stock market was in a correction, let's say, or a decline, and having a dramatic sell-off, and bonds were falling too. All the other times it's happened, 2008, during a horrible financial meltdown, Treasury bonds were going up. They were soaring. It happened. That was just one. I mean, many corrections I've seen since the 90s. This time, that morning, they were falling. And that's an awful sign. It's a sign that investors around the world were not buying bonds. And that's got horrible implications for the future financial situation in the United States. And then within hours, Trump announced the pause in the tariffs and helped spark the stock market rally that's been continuing ever since. And the news stories were that one of the things that got Trump to announce that pause was the very thing I just talked about, the drop in the value of U.S. Treasury bonds. Now, the bonds have bounced since then, thank goodness, but I think that's a huge warning sign for anyone who saw it and people around the world saw it for sure, that, look, using treasury bonds as a safe haven is not a good idea. Gold, then, is something you need to own. You need to think like a central banker in how do you survive the worst situation. Central banks don't have all their money in gold, but they do use them as a core reserve, the most important reserve, and that's how people need to think. And that's where we're at. I mean, it's incredible what happened that morning.
We'll have more with Mike Swanson right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, anything going on with silver?
Well, silver's really worth talking about because I'm sure you do too, but I've gotten a lot of questions from people. Why isn't silver going up like gold? They see gold going up. They see gold, going to 3,500, making all-time highs, and then silver is still below, $35 an ounce. Why is this happening? Well, I think the explanation is very simple. And that is that, as I was saying before, it's really the institutions that are buying gold. It's really the big money that's buying gold. People who are sophisticated investors, hedge funds, and so forth, that think to themselves, oh, we need a safe haven, in our portfolios, not just to make money, but to protect ourselves. They buy gold. They don't really buy silver. Historically, though, silver will go up when gold goes up. And silver hasn't done that, and that's what's caused people to scratch their head. Why? Well, it's very simple. Silver has the nickname the poor man's gold. Silver is something that the masses like to buy instead of gold because they think, well, gold's $3,500 an ounce. I can't afford that. I'll go buy an ounce of silver instead. And silver tends to lag gold during the start of a big gold metals bull market, and then as the masses get in, silver starts to go up, and eventually will go up more than gold. So the reason why gold isn't taking off yet is because the masses are not in the metals market yet. They still completely ignore these markets. I think to their detriment. For us, I think that makes for a wonderful buying situation to get ahead of them. When I see that silver hasn't gone up as much as gold has, I say to myself, well, I want to buy it then, because one day it will. But the number one investment idea I can give to an American, or a Canadian for that matter, is to buy silver, right now. Maybe, but even that, few in the United States will do it.
Are people in the U.S. still enamored with Bitcoin? If they feel nothing can hammer it down?
Yeah, pretty much. And, Bitcoin did fall more than the U.S. stock market did from its high on this recent decline. But they just want to get rich quick, and that's what the crypto gurus tell them Bitcoin will do for them. You really can't convince these people otherwise, despite the fact that so much of what the crypto gurus say is can be demonstrated not to be true. For example, they say Bitcoin is a safe haven that's going to replace the U.S. dollar and replace all world currencies. That's what the so-called Bitcoin maximalists claim. Well, what happened on this recent decline? What's happened in April? In April, the U.S. dollar index went down. Every single currency in the world, just about, went up against the U.S. dollar. What did Bitcoin do? What went down too? That means that Bitcoin, just like the U.S. dollar, went down against every single currency in the world between New Year's and April. So it's not a safe haven in any sense. It's not going to replace world currencies, and we just saw the proof of it in the past couple weeks. So all it is an instrument of speculation. And that's how people should treat it. It's a gambling instrument. If you can bet right, luckily, on Bitcoin, yes, you can make a quick return because it's so volatile. But if you bet wrong, you lose. And if you hold it as a long-term investment, I think you've just seen a taste of what's to come when Bitcoin fell from January to April with the stock market, with the bond market, with the U.S. dollar. The next time that happens in the future, I think Bitcoin will go into an even bigger decline than what you see now. And that's what happened in 2022, too. Bitcoin completely crashed when the NASDAQ pulled back, because that's what it's always done throughout its entire history. Whenever the NASDAQ pulls back, Bitcoin crashes. The crypto gurus continue to ignore that, but they talk nonsense and just make crazy predictions when what people need to do is look how things have performed consistently in the past, because that's how they're likely to perform in the future.
What do you see happening in the crude market?
Well, crude has pulled back, and it pulled back in April, and I think for the short term, it should find it's in a downtrend. You know, it's below its 200-day moving average too. But at some point it's going to bottom out. But I think it's suggesting there will be economic slowness in the global economy. Even though I was saying before, I'm not worried about the moment in the United States. But after 90 days, I think things could start to slow down, or by the end of the year. And oil is probably simply showing some of that ahead of time. But I think we'll see, at some point there'll be a major bottom and buying opportunity for oil, energy stocks, and so forth. And I'd like to be a part of that when it happens. I don't know if there's huge downside from here, but I think it's not time yet to think it's going to go up and have a huge rally.
What's going on with commodities like copper?
Well, copper plunged in April, and it's bouncing back up. I think it looks good. It's above its 200-day moving average. I think copper mining stocks are good buys too. Some of them pay good dividends.
Anything else you think we should be keeping a close eye on right now?
Well, one final indicator that I'm following is the VIX, the volatility index for the S&P 500. It measures the premium that people pay for S&P 500 options, and it spikes up when people scramble to buy puts, and they do that in times of panic. So the VIX got above 50 in April, and it spiked to 50 last August, and now it's going back down. Well, in bear markets, typically when the VIX has such a spike, it'll fall back below 20, some often below 18, and right now it's around 24. It'll probably take several weeks or the rest of this month. If it's going to get below 18, it'll probably take the rest of this month to get there. So I'm looking at that for a time that would be when the momentum in the market starts to run out. So I think things can stay bullish probably to our next interview. For this month, I'm not worried about, a top in the market, but the VIX is something I'm watching for a warning sign that we're getting close to that.
Mike, thank you so much for being on the show.
Thanks. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or for any of our guests, you can send them to info@HowStreet.com. We'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of House Street Media Incorporated.